Hello, everyone. Welcome back to On the Spot. Veteran trader Toni Hansen is joining us, sharing some of her tips for success. Now, we have more emails here, so let's just jump to this one real quick before we get into more strategies and talk.
Okay, spring it on me.
All right, Mo sent in an email and wants to know, hi, Toni, how much time should you give before entering your next trade once you're out of it if you are trading using swing strategy?
That's a great question.
So, meaning he's closing out a position and looking to get into his next strategy.
Yes.
Do we know if it's on the same issue? Because that's a good question.
Well, it says when you're using a swing strategy. So I think if it was active, it might be the same one, but I don't know.
Well, if you're dealing with the same currency pair, for example, then it could very easily be a couple of days before you have another decent strategy. Especially, let's say we just took a typical breakout strategy. Maybe it's a bull flag, or it's a breakout from highs, or that Phoenix that we talked about a minute ago. If you're taking a strategy like that, then oftentimes what you're expecting is a strong continuation move to the upside. And that's going to take time to give you a decent correction, whether it falls into another congestion level or the momentum starts to change and shift at highs like we just saw here on the intraday time frame. So you're probably dealing with about a week or even longer on the same issue if you're waiting for another swing trade strategy in that same issue.
Okay.
Very good. Okay, so if anybody has any questions for Toni, we do have her here for the rest of the show. So pick up the phone, give us a call, or you can always send an email, trader@tradingviews.com. Now, let's talk a minute about taking profits too early. It sounds kind of odd, but sometimes it gets a lot of people in trouble because they start taking them too early, so then the next time they feel like they need to hold it a little longer. How do you get past that, feeling like you're taking them too early?
Well, I think that's probably one of the main problems that a lot of traders run into, especially if you've had a stop or two, because you're just so happy to have a gain and maybe something that covers the stop that you just took, that you want to lock in that gain and not risk taking another stop. What I usually do is I will actually have a target where I will put an order on the books at that target zone, and as it gets closer, I'll go to a manual trade, or I'll just, step away, but I can do a little bit more of manual management as it's actually coming into my target level. Of course, I'll check in on it along the way to make sure nothing has changed in the overall reason I took the trade, like if it's not following through as fast as it should, or there's some resistance that I didn't notice before. So I might alter it occasionally, but I really try to stick to that target by having that order. And I'll often step away right after I enter a trade, because usually the most volatile action and the area that you're most likely to second guess yourself is shortly after you take a position. So it's a great time to just, if you're day trading, go get a drink of water or something out of the other room, and just kind of step back.
Walk away from the computer.
Yes, walk away from the computer.
You said that and it makes me smile because I spend a lot of my trading day walking away from the computer. You simply have to let swing trades work out. If you're sitting in front of your computer all day, what you're doing is day trading, because you'll pull something off too soon and not have the opportunity. But from the money management that Toni talks about, stops are going to happen. The fact of the matter is what you're looking to do is use your probabilities to catch a larger piece of the move. And so the risk is setting your stop in a level to where one or two losses to get the greater reward is still going to make you a profitable trader.
Right. So usually I'm using bracket orders basically because I've got my target level on, but I always have a stop on the books too. And I'll have it a couple of pips under where a support level is going to be, depending on the time frame. If it's a larger time frame, it's going to be even that, because I don't want to get just flushed out with a couple of trades if there's a retest of that support zone. But the thing to keep in mind is that, when you are dealing with these trades, yes, maybe you might be able to get away with not taking a couple of stops if you're manually managing it, because you'll see, it's still going to react to that level and bounce. But especially when you're first starting to learn to trade, you need to just leave them on the books and not play around with them. And with your swing trading, like you said, you start to micromanage. You'll see things like you'll see support and resistance levels on like a 5-minute time frame. And you're like, oh, I have a gain and it's right at that resistance level. I'm just going to go ahead and take it. And then A little while later, it goes and hits the target that you'd been looking at already.
That's what's frustrating.
Yeah.
And I have found that tilting your head in the monitor actually doesn't help. And wishing and blowing, it doesn't help. You have to leave your computer.
You know, sometimes you just get pegged into the trade too much. Sometimes you just get too focused into that one idea. You know, and you have to walk away and let the plan work out. I'm a swing trader, and that's primarily my Forex plan. I'll take 26 pips if that's what's there, if I'm losing the momentum to the trade. And if I can visualize that something significant's happening, for example, like you said, if we've hit this resistance level or we've hit this support level, and then there's new volume moving against that move, that's a little bit more of a commitment that I might want to just snag what I have on the table and leave. But if there's nothing wrong, we know that consolidation happens a lot during a continuation. The braiding patterns eventually.
Right.
It just depends on how far. It just depends on how far you're into the time frame.
Yeah, and you know, one of the things that we're going to talk about, like I said, we're shooting a DVD, and one of the things that we're talking about tonight that we're going to be recording is based upon how to manage open positions.
Excellent.
So how to change those exit strategies if the market is changing.
Excellent.
Well, we do have another email here. This one is from Chris in Missouri. Remember, send your emails to trader@tradingviews.com if you have any questions for Toni or you want her to look at something for you. Chris in Missouri says, could Toni please evaluate FSYS for an active trade? After a 3-day run making higher highs, it is dropping back on very low volume. Thank you, Toni.
This is one of those where we might actually see that Phoenix pattern start to play out here. We had the momentum reversal where you had this strong downside move here, and then this shift in momentum at the lows. And you can see that these moving averages started to converge.
Right.
So when this channel broke higher, that gave a really good buy strategy. Now, for an ideal Phoenix, it would have moved a little bit more quickly up into this resistance, but as long as it hugs this zone, this is a daily chart here, so if it hugs this zone for about, if you're looking at how many days it is on the upside here, you want it to base out about 1.5 times that. So if you've got like an 8-day rally, you want it to base out about 1.5 to 2 times that. So up to 16 days. And so if it can just along there, especially on lighter declining volume, then that will give a really good opportunity for a buy setup that would probably bring us up about into this zone here. It's around 42 or so before we start to see it really stall again. But with this shift in momentum, if that holds, it could still come up into this zone up here. So that's what I would be looking for. I wouldn't be really looking for this as a reversal strategy off of this level just because we do have this shift in momentum. You're going to have some intraday sell setups, but probably more overlap from one day to the next.
Okay.
All right, we have another email. This one is from Dresden in Las Vegas. Toni, I am in Zion, Z-I-O-N, and I'm waiting on a fresh day on, we have 3 more stocks here to look at. I'm waiting on a fresh day on HOLX, LINTA, and AMLN. Can you please analyze these?
All right.
So let's start with Zion. He's actually in Zion.
Okay. Well, Zion, this was a really great breakout strategy here on this daily time frame. Look at that really light volume there. You've got the confirmation volume on the breakout, and it's hitting its first resistance zone here. And if we look at this initial run, you'll see that it actually took 2 waves of buying before it made it into that high. So you would typically expect that it could easily mimic that. So it wouldn't be a surprise if we do see a week or 2 of congestion in this level. Based upon just this time frame alone, though, looking at this, you would be expecting a, whoops, I changed the time frame.
That's a 65, so, or that's
All right,
a 30.
what were we on, a daily? Right, okay. So if we look at this on a monthly here.
That's just your long term. That's a midterm.
Right. Then you look at this entire rally off of that lows, and you would add that for a larger target up here around 27. Let's go back to that daily. And so if we take this entire run here from the end of December up to here, and we basically add that from this low on upward, and that's what we would look at as a larger time frame target. Just wanted to make sure we weren't running into too much on the monthly chart. We do have it starting to break out of that larger congestion there as well. So if it can push through those highs, then yeah, it could very easily come up into that 27-ish or so.
Well, you can tell that these regional banks have actually had quite a bit of pop lately. So that's what Zion Bank is.
All right, let's look